Welcome back to the Stock Kong channel. Today we're diving deep into the recent market volatility and what it means for your portfolio.
Good morning, afternoon, and welcome to this in-depth audio overview of a recent Seeking Alpha article titled Rocket Lab's Rally May Be Just the Beginning. The piece, written by an analyst from Beyond the Wall Investing, makes a compelling bullish case for Rocket Lab Corporation, ticker RKLB, arguing that the stock's extraordinary run, over 550% gains since the analyst's buy initiation in November 2024, is far from over. Let's start with the big picture. Rocket Lab has evolved dramatically. Once known primarily for its small lift Electron rocket, which is now the second most frequently launched U.S. vehicle, the company is positioning itself as an end-to-end space systems powerhouse. The analyst believes the real inflection point arrives in mid-2026 with the debut of Neutron, a reusable medium-lift rocket designed to dominate the constellation deployment market. Why is Neutron such a game-changer? According to data cited from Rocket Lab's own 2021 statements, roughly 98% of payloads expected through 2029 do not require the massive heavy lift capacity of something like SpaceX's Falcon 9. Neutron, capable of carrying 13,000 kilograms to low Earth orbit, targets exactly that underserved middle ground. Its reusability features, captive fairing, liquid oxygen methane propulsion, and in-house developed technologies promise lower costs and higher cadence. The company already has 3 fully priced Neutron missions in its backlog, and the analyst expects many more to follow a successful maiden flight. Financially, Rocket Lab is showing clear signs of maturing. Trailing 12-month revenue as of Q3 stands at $555 million, representing 52% year-over-year growth. More importantly, gross margins have undergone a dramatic turnaround. 5 years ago, GAAP gross margins were negative 34%. Today, they're at 37%, with management guiding for 38% in Q4 2025 and a non-GAAP target of 44%. This improvement stems from a richer mix of higher-margin launch revenue, rising average selling prices for launches, and better overhead absorption. On the bottom line, adjusted losses are narrowing rapidly. Q3 EPS came in at negative 3 cents, beating consensus expectations of negative 10 cents. Management has signaled that R&D spending on Neutron is approaching its peak, setting the stage for significant operating leverage. The analyst forecasts positive adjusted EBITDA in 2026, driven by continued margin expansion and controlled OPEX growth. A frequently overlooked strength is Rocket Lab's Space Systems division, which grew 74% year-over-year in the most recent quarter. This segment includes in-house spacecraft platforms like Photon, Lightning, and the mass-producible Flatellite, plus vertical integration advantages, 3D printed engines and reaction wheels, proprietary solar cells, and advanced sensors. This end-to-end control creates a meaningful competitive moat and supports the higher margin profile the market craves in growth stories. National security tailwinds add another layer of conviction. In December 2025, Rocket Lab secured an $816 million contract from the Space Development Agency to build 18 satellites for the Tranche 3 tracking layer. Cumulative SDA awards now exceed $1.3 billion, elevating Rocket Lab to a tier of strategic importance comparable to defense primes like Palantir or Lockheed Martin in the space domain. A January 2026 visit to company facilities by Secretary of Defense Pete Hegseth underscores growing Pentagon interest in resilient, proliferated space architectures, exactly the kind Rocket Lab enables. Turning to valuation, yes, the stock trades at a hefty 77 times current sales, but on forward estimates, the FY 2026 price-to-sales multiple compresses to around 52x. With no direct public peers, SpaceX remains private. The analyst views this premium as justified, given consistent revenue beats since mid-2024 and a projected $1 billion revenue run rate in 2026. Applying the same 52x multiple to that figure implies a market cap of roughly $53 billion by year-end 2026, suggesting 13% upside from current levels. While that may sound modest for a high-growth name, the analyst notes it could prove conservative if additional contracts accelerate backlog growth. Longer term, a $2,770 billion total addressable market by 2030 provides ample runway. Of course, risks remain. The biggest near-term threat is the Neutron maiden flight in mid-2026. any significant failure could trigger a sharp repricing of the growth narrative. Competition from SpaceX, with its unmatched scale and pricing power, is ever present, and the calculated upside, while positive, may not fully compensate growth investors for the inherent volatility. Despite these caveats, the analyst maintains a firm buy rating. The combination of Neutron's launch catalyst, accelerating profitability, margin expansion, and strategic contract momentum paints a picture of fundamental transformation that should only gain speed through 2026 and 2027. In summary, this article argues convincingly that Rocket Lab sits at a rare inflection point, scaling a reusable medium-lift vehicle, nearing break-even, deepening defense ties, and operating in a market with enormous long-term potential. For investors comfortable with the risks, RKLB remains one of the most intriguing ways to play the commercial space boom. That's the extended overview of Rocket Lab's rally, maybe just the beginning.
Hey viewers, don't forget to like, subscribe, and add our channel to your favorites. We will continue to provide you with more insightful stock analysis.